a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Another beaten to raise. Nvidia shares bouncing back potentially after some post-earnings swings as investors see strong AI demand. So stocks mixed today following a two-day rebound. Markets awaiting more earnings, and of course those jobless claims are on deck. And it's a busy day of talks in Geneva. The US resumes discussions with Iran and is set to meet with Ukraine. So let's take a look at those markets because, of course, we're pre-market and they are bouncing around just a little bit. As you can see, the S&P 500 and Nasdaq 100 basically unchanged at this point. They've been both higher and lower in the session as the market makes up its mind about Nvidia's valuation and whether it should be richer or perhaps less rich, at least today. That said, we're back in the green for the S&P 500 on the year. We're up 1.5% after the last 2 days of gains, and we're up about 0.3% on the Nasdaq 100 after the last 2 days of gains. Continued uncertainty about software in various sectors. Ed Yardeni this morning saying that we've gone from AI fatigue to fear to now AI derangement syndrome. So we'll see where the market takes us next. Let's take a quick look at bonds. Not too much movement here in the US, a little bit of movement still in Japan. That story bears watching. And then we had a little softness to the dollar earlier as well. All right, let's get to some individual movers now. Stocks to watch with Abir Abu Omar. Abir.
Good morning, Vonnie. Obviously starting with Nvidia this morning, which is gaining nicely 1.6% up in the pre-trade. And that is after a lukewarm response by investors yesterday to the earnings that were quite robust. Their forecast, their revenue forecast for the first quarter is quite strong. Segments across Nvidia are doing quite well. Gaming is a little bit under pressure. It was shorter than what the average analyst estimate was. But overall, Nvidia results were pretty strong yesterday, and that is why you're seeing it trading up in the market, in the pre-market this morning. Moving on to Salesforce, this software company, Vonnie, has been sort of the poster child for the software ruse that we've been seeing across the S&P this year. Now it is down 3.7% almost this morning, and that's on the back of disappointing earnings. Now, although the earnings or the revenue came in line with what estimates were, investors were not very excited about that. And then finally, moving on to Nutanix, it is gaining in the pre-market trade this morning 21.8%, adding to those gains from earlier, and that's on the back of this AMD deal where AMD ties in a partnership where it pays $150 million for its stock. So that is gaining pretty nicely, now 22%. Vonnie, back to you.
Huge move potentially there in the session. Abir Abu Omar, thank you. She'll be back later in the hour. Also coming up this hour, a deeper dive into those Nvidia earnings with Frank Lee of HSBC, and later again, Kallum Pickering of Peel Hunt joins us to discuss the market impact of tariffs and geopolitical uncertainties. But first, Secretary of State Marco Rubio says the U.S. will investigate the deadly Cuba speedboat shooting.
I'm not even going to speculate as to what it could have been. It's a wide range of things. But suffice it to say, it is highly unusual to see shootouts in open sea like that. It's not something that happens every day. It's something, frankly, that hasn't happened with Cuba in a very long time. But we're going to find out. We're not going to base our conclusions on what they've told us.
Joining us now is Bloomberg's Laura Davison. Laura, what do we know for sure about this, given that much of what we've been learning is from the Cuban side, right?
As you mentioned, we don't know a whole lot, and as Rubio said in that clip, the U.S. really hasn't speculated and essentially, is expressing a little bit of disbelief or at least a lack of trust in exactly what the Cuban government has said. What the Cuban government has said, however, is that there was a speedboat licensed in Florida with 10 people aboard who were armed, who had Molotov cocktails, weapons, other things, and the Cuban government says they were headed toward Cuba to commit acts of terrorism. The Cuban government shot and killed 4 of those individuals. The other 6 are injured. This is, an unusual thing and comes at a really critical moment where there are heightened tensions between the U.S. and Cuba. There's been an oil embargo for several weeks now in Cuba that the U.S. imposed after the ouster of Maduro in Venezuela. And the country is really kind of at an economic crisis point. There isn't fuel to energize many of the things that they need. A lot of business activity has stopped. And Trump has openly mused about potentially getting involved in Cuba, whether it be regime change or something else. It's not at all clear what the U.S.'s plan is, both in terms of bigger picture with regime change or in response to this action. But it's a very critical and moment when tensions are heightened.
Yeah, well, we'll see what the U.S. comes up with in its investigation. Now, we have a lot of talks going on in Geneva today. Crucially, Iran and the U.S. start their third round of nuclear talks. Are we anticipating that we'll see any breakthroughs?
Really unclear. The Iranians have gone into this round of negotiations saying that they have, maximum flexibility. They're able to kind of really bring something to the table here. They have expressed some dismay, though, that they're hearing conflicting things from U.S. officials. President Trump, in his State of the Union address just a couple nights ago, mentioned that, he had some strong words for Iran, saying that he wanted to find a deal diplomatically, but wasn't afraid of using, military force here. This is also coming as the U.S. is sending additional fighter jets, combat jets, to Israel. Of course, Israel and Iran being prime enemies here, sort of suggesting that the U.S. is further adding to its arsenal of weapons and military assets that it's amassed in the region, suggesting that Trump is at least, keeping his options open when it comes to military intervention.
Yeah, and it also suggests that maybe he's trying to pacify Bibi Netanyahu, right, who was very unhappy with President Trump not wanting more involved in these talks, not wanting to talk about ballistic missiles, for example. I mean, this sending of the fighter craft means that potentially Israel could be defended in any worst-case scenario, too.
Yes, this is the whole situation with Iran has been very difficult for Trump to keep, kind of keep those talks going, but also keep Netanyahu happy. The Israelis essentially won't be happy if there's any sort of deal between the U.S. and Iran. They see Iran as their prime enemy and don't want, Iran to be getting off with some sort of deal. This has kind of been, one of the unspoken tensions as these negotiations have gone on. It's still not clear exactly what the U.S. wants out of these talks. Rubio, said earlier that, they were going to be focused on Iran's nuclear program. But Trump, in the State of the Union / in many appearances, hasn't said what his specific goal is, which is highly unusual for a U.S. president to not go in to some of these high-stakes talks with the potential for military action without having clear bullet points of what they're looking to get out.
Yeah. Laura, just on U.S.-Ukraine talks, which also take place today as well, President Zelensky has said that we're at the beginning of the end of this war, and at the same time, there doesn't seem to be any breakthrough on the territory question, nor can anybody foresee how that might work. Are we getting anywhere there?
Trump has expressed impatience, but it's not clear that there's any, breakthrough happening. Zelensky did say that he thinks that after this round of talks that there might be ready for a leader-level meeting between the U.S. and Ukraine on this, between Zelensky and Trump himself. We really have not seen signs of that breakthrough come to fruition. This is, with the umpteenth rounds of talks, and we even saw J.D. Vance, the vice president, say that, the U.S. may have overestimated just how easy this conflict was going to be resolved. Remember, President Trump said on day one in office more than a year ago he would be able to resolve this conflict. There's still no end in sight.
Yeah, absolutely. Laura, thank you so much. That is Bloomberg's Laura Davison. Turning to tech now. Nvidia now turning positive in pre-market trading after shares fluctuated following another solid results and a stronger than expected outlook. Matt Bloxham of Bloomberg Intelligence joins us now for more. Matt, what were your key takeaways, given that we got a lot of guidance, but potentially not guidance on the things that we really wanted to know about, like why Rubin is lagging, for example, or a little bit more on the Blackwell outlook?
Yeah, and I think, that the kind of key data point that people are looking for, which I think would be unrealistic to get yet, is the next phase of the AI demand story. Right now, Nvidia's revenue outlook is being supported by the massive investments by the hyperscalers, $650 billion of investment in 2026. Most of it, or a big chunk of it, going to Nvidia. Really, what you're looking for the next leg is, for the enterprise demand to go from pilots to full-scale deployments, which will then give the market confidence. This isn't going to be just a short-term kind of investment cycle driven by the hyperscalers, but it's going to get sustained by that enterprise demand. And we didn't hear any of that narrative yesterday. So I think, it's not surprising that Nvidia reported really strong numbers, because they were strong numbers, up, over 70% year on year, and the forward guide is up almost 80% year on year. So, yeah, objectively, that's great performance, but everybody knows where it's coming from, so there's no incremental surprise about the momentum.
All right, we actually have to leave it there. Matt Bloxham, thank you so much. We're going to be speaking to Frank Lee of HSBC as well on Nvidia in just a few minutes, so do stay tuned. Now to other top stories trending on the terminal this morning. Apollo and BNP are said to be near a deal to partner up in Europe's private credit market. According to sources, the two firms will arrange loans to corporate and private equity clients in Europe. The sources didn't specify the size of the deal. Rolls-Royce plans a huge stock buyback of as much as £9 billion over the next 2 years. The company raised midterm earnings targets on soaring demand for aircraft engines and power systems that drive data centres. And shares of French utility company Engie rose as much as 7% after agreeing to buy the UK's largest power distribution network. It's acquiring UK power networks in a $14 billion deal. Engie is seeking to capitalise on an expected surge in demand from electric vehicles and data centres. Coming up, we'll take a closer look at Nvidia results with Frank Lee of HSBC with his price target cut on the stock. That's next. This is Bloomberg.
Nvidia hit it out of the park yet again.
It was a solid set of earnings.
75% growth year on year on the data center space.
They had a very confident outlook for how they were going to sell more AI chips and data center product going forward. Is that going to be a thing?
As the market plays tug of war over is the AI economy booming, or are there concerns around the AI economy, and Nvidia continues to beat regardless of what this debate is concluding, the stock just keeps getting cheaper and cheaper to the point where it's becoming an obvious buy.
Could it be any bigger than this? And they basically said yes.
Nvidia bouncing back this morning then after some post-earnings swings. HSBC's Frank Lee joins now. He has a buy rating on the stock and has just lowered his price target from $310 to $295, just $15, but still well above where we're at right now. So, Frank, you weren't surprised by the bullish outlook, and indeed you were quite happy with it, right? But you do feel like there may be a lack of a narrative going forward. Can you explain your case to us?
Yeah, sure. I think, the earnings is fine. This is the second quarter that Nvidia has had a clear beat and raise. They did that last quarter, and that was the first time in 6 quarters that they started reigniting that momentum. But I think one of the issues that we've seen over the last couple of months is that there hasn't been anything new as far as a new narrative, right? I think, for the first couple of years of the AI trade, Nvidia wasn't just beating numbers, but there was an increasing TAM opportunity that people could really see. But now I think, we see that they're doing great, but then, there hasn't been anything new as far as like something, last year we've talked about enterprise and sovereign, but we still haven't seen clear signs that is clearly building the TAM market much bigger. They're still very dependent on the hyperscaler CapEx, which so far has been on an upward trend.
Were you satisfied with the answers? Analysts asked a lot of questions on, margins and the sustainability of those margins, and also the cash generation of the hyperscalers, as you mentioned. Did Jensen Huang put to rest any concerns the community might have had?
Well, I think there's 2 things that we need to think about that has somewhat shifted a narrative a bit. The first one is that, the memory pricing going up in the last couple of months has been a lot more than people expected. There was some concerns on whether this could impact margins. It doesn't seem like that's the case, given that their margin guidance was still very constructive for the upcoming quarter. But it does mean that, as the hyperscaler CapEx goes up, they have to pay more for memory in other areas, so that there is more competition for some of that CapEx. The second thing is that I think the agentic AI narrative has also been gaining steam since the beginning of the year. And I think what's not entirely clear is how much of a benefit is this going to be for GPU versus CPU? CPU has been a very strong market this year. So does agentic AI also benefit CPU at the same proportion, or if not more than GPU? So I think those are the 2 things that the market is still having some doubts about.
We obviously have the GTU conference next month. Is it possible that Jensen Huang is keeping something in his pocket for then? I mean, he can't constantly have updates, right?
Yeah, that's a good point. I think, the Rubin and Rubin Ultra, while it's positive and constructive, we've known about this narrative since the GTC last year. So it's been about a year. So I think what the market's going to be looking for is perhaps what comes next after the Rubin platform. So Phenom is the next generation. There isn't a lot of detail so far on it, but I think this is what the market's looking to see on GTC, is to see, you know, what are the spec migrations that we can see with this next generation that could bring their ASP even higher.
So margins were very healthy, obviously revenue healthy and so on. Frank, what would you need to see in order for the stock price to move towards your price target? Because right now it's questionable whether we'll get back above $200 today, for example.
Yeah, so I think what we need is probably, you know, as along with the overall AI trade, I think what you're seeing is, you know, it's the re-rating story on AI is getting more difficult. So I think you need either a very strong new narrative or a significant beat in earnings that's going to lead to a significant revision, not just for the next quarter, but over the next probably, you know, 1 to 2 years, that's going to bring earnings up significantly again.
I want to ask you about some of the other companies that we saw report, Frank, because I know that, you know, for example, on Synopsys, you're also lowering your price target just by $5, but it's sort of the direction that's important here, right? Are you concerned about the software companies, and are there some that will survive any kind of scenario?
Yeah, so we actually downgraded Synopsys last week to a hold rating, but Synopsys is not your typical software company. So I know there's a lot of concerns about AI threatening the software core businesses, but in Synopsys' case, at the end of the day, it's still very much a semiconductor-related company. And I think where we do see this year, their challenge is a transition, because this year, they're not going to see that much growth outside of the Ansys acquisition they made. And the reason they're not seeing much growth is, one, I think, you know, there's still some geopolitical overhang because of China. They are very dependent on China semiconductor companies using their software. And secondly, I think, you know, Intel Foundry is also a big customer, and there's not much visibility about Intel's Foundry business. So I think that is the transition period they're going to see this year that's going to lead to lower growth.
You know, Bruce Richards was on earlier talking about how many private credit firms have way too much exposure to software companies, and he seems to think that they're going to be in trouble. Can we get through this period without seeing some kind of a major fallout for not just private credit, but, you know, for the whole market, the public markets, in at least software, if not some of the other industries that have been taking it on the chin recently?
Yeah, so I think what we're going to see a lot more this year is just a lot more focus on earnings quality, earnings delivery, and that matching with valuations. I think we're now past the stage where if you're an AI company, you get a free ride on re-rating. I think those days have passed. I think it's going to be a lot more focused now on, can you deliver earnings? Can you surprise the market on earnings? And if you are trading on a high valuation multiple and you're not delivering an upside, that's going to make you very vulnerable.
I do want to come back to Nvidia for a moment, because one thing analysts didn't particularly ask about was China. That seems to be sort of in the rearview mirror a little bit, but we did also get the news that Nvidia can now ship some H200 chips to China with various conditions attached, I suppose. They're not going to add it to first quarter revenue, but could it be meaningful going forward, Frank?
Yeah, so our view on China since last year has always been that we look at China as an optionality. It's a nice to have, but it can't be a critical part of your thesis to buy Nvidia, because there's just too many unknowns around the geopolitical uncertainties. You know, it seems like the news flow changes every other week or every other month, whether they can be in China or not. So I think right now the way we have addressed it is take that part out. And I think most of the analysts have taken the earning experience, including Nvidia, has now taken out of their earnings. And we just basically value Nvidia based on its existing business. And you look at China as a nice, you know, cherry on top of the sundae, but you don't look at it as a key driver for your business right now.
I'm sure that's not the first time China has been described like that. Frank, thank you so much for joining us today. That is Frank Lee of HSBC. Coming up, the race to get tariff refunds. Look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Time now for your front page news. First up, the Wall Street Journal leading with the scramble for companies to get their tariff money back. The Journal points out that President Trump's far-reaching global tariffs netted at least $130 billion in the 10 months they were in effect. For businesses, though, getting a refund could take far longer. Lawyers are predicting a deluge of litigation. Next up, the New York Times leading with President Trump's choice of wellness influencer Casey Means for Surgeon General. At her confirmation hearing on Capitol Hill, the Times says Means was calm and mostly unflappable when pressed on her stances on birth control, pesticides, psychedelics, and whether she believes vaccines cause autism. Means repeatedly sidestepped questions about vaccinations. And finally, the Washington Post reporting a top Treasury official, John Hurley, is leaving his post after privately raising objections to White House-backed plans to crack down on alleged fraud within the Somali immigrant community in Minnesota. The Post says Hurley had recently conveyed his concerns to Treasury Secretary Scott Bessent about a project to enhance federal monitoring of the international payments from the Minneapolis area. Let's check markets this post-Nvidia morning. So we had futures higher and lower. Right now, we are seeing S&P 500 futures down ever so slightly. That said, the index is back in the green for the year. We are in the green to the tune of about 1.5% on the S&P 500. And in terms of the Nasdaq, we're in the green to the tune of about 0.3%. But that's after 2 days of gains now. In Treasuries, we're not seeing a whole lot of movement, at least on the U.S. side of things. More so in Japan. Coming up, dollar weakness with Kallum Pickering. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Another beat and a raise. Nvidia shares bouncing back now after some post-earnings swings as investors see strong AI demand. That's going to have an impact on stocks today after a 2-day rebound. Markets awaiting more earnings and also jobless claims are on deck. And it's a busy day of talks in Geneva. The U.S. resumes discussions with Iran and is also set to meet with Ukraine. So let's have a look at those markets because we have been bouncing around. Right now, we're very fractionally lower on futures for the S&P 500 and the Nasdaq 100. Russell 2000 futures, though, are doing well. Now, for the first two indices, we are back in the green on the year after the last 2 days of gains. Several things to watch, though. Obviously, we have to see how Nvidia trades. It faded its post-earnings gain, but that said, it was lower this morning. It's now back up again. So I think the market is trying to make up its mind about Nvidia. And then also in the background, there's this idea that the U.S. and China rhetoric is heating up again on tariffs, with Jameson Greer saying China tariffs are going to still be between 35% and 50%, and China saying, look, we'll retaliate if you're not careful. Let's take a quick look at bonds. Not seeing too much movement here in the United States, though we are hugging that 405 mark on the 10-year. Let's get to some individual movers now. Back with us, it's Abir Abu Omar. Abir.
Bonnie, good morning. The world's most valuable company is doing quite well this morning. It's gaining, pairing some of those gains from earlier in the pre-trade session, but still gaining 1% just north of that. Now, this is after a lukewarm response by investors post its earnings. In fact, its earnings were quite robust, and the revenue forecast for this quarter is also quite strong. Segments across Nvidia are doing very well when it comes to data centers, automotives as well, but gaming was facing a crunch, if you were. Moving on to Salesforce. Now, Salesforce is often referred to as one of those poster childs for the software crunch that we've seen across markets this year. It is down by almost 3%, 2.6% this morning in the pre-trade session. Now, this is not because of a revenue miss. In fact, its revenues have met analyst estimates, but investors are not really that excited about the story, and you could see that reflected in the share price this morning in the pre-trade. Moving on to a stock that's doing quite well, Nutanix is gaining this morning, up almost 23% at this point, adding to those earlier gains, Vonnie, and that is on the back of a deal with AMD where AMD pays $150 million for its stock, adding $100 million for some joint duties there in the deal, and that is Nutanix for you, up 23% this morning. Vonnie, back to you.
Lovely pre-market gain there. Abir Abu Omar, thank you so much. Kallum Pickering of Peel Hunt weighing in on price moves so far this year, writing, quote, financial markets, businesses and households face even more uncertainty than usual. Markets set to remain risk on, though, as global economies expand at a decent pace, despite a host of uncertainties. Why? Stimulus matters. I'm pleased to say Kallum joins us now. He's chief economist at Peel Hunt. So, Kallum, before I ask you about all the things that might detract from any stimulus we're going to get, explain to us what you mean, the effects of the one big beautiful bill. What else will be stimulative?
If you think about the four biggest economies in the world, US has recessionary levels of borrowing at full employment. 7% of GDP is just a huge number for a government to be borrowing when the economy is so strong and labour markets are so strong. The second biggest economy in the world, China, less of a structural story, but periodic stimulus just to keep growth at around the 5% target. Third biggest economy in the world, Japan, just fought an election over how big the fiscal stimulus will be. There was a big majority in favour of more spending. And Germany, just 18 months ago, won an election with the government planning to borrow €1 trillion to invest in defence and infrastructure. That's a lot of stimulus. Central banks, Fed likely to cut this year, Bank of England likely to cut, ECB might cut, BOJ, even if it hikes, policy is easy. That money just has to wash through markets, and it tranquilises all our nerves against all of these issues that we're facing.
All right, I think we can go home now.
Exactly,
no,
yeah.
I'm just kidding.
But we need an explanation as to why markets are up despite the risks, and this, for me, is the best one.
Well, sure. That said, I could see why, the immediate reaction might be risk on, but why wouldn't all that give the market pause, given that that's a lot of uncertainties being injected into the global economy as well, including the after effects of anything inflationary?
So there's a specific type of risk that I'm most concerned about, which is any kind of supply-side shock where suddenly we have a shortage of something running up against this demand-side positive story. And so think about it from the bond market's perspective. Basically, as far as the eye can see, public debt levels will rise across the advanced world. This will have to show up in borrowing costs at some point. We're also in a much more inflationary environment than before. Not higher rates of inflation, but be these periodic inflation shocks because of geopolitics and the like. And so the big risk to this is one of these geopolitical issues that we're paying attention to goes wrong. Suddenly we have a shortage of a key commodity. We have a shortage of energy. That's reflected in higher prices. The bond market reacts negatively. Discount rates go up and and equity markets come off. If it's not that kind of risk, if it's not a supply risk to the world, the market can wear it. So trade tariffs. This is a risk that the market can wear. Softness in private credit, that's a risk that the market can wear. The one I'm most concerned about is US-Iran, because if you get a blockage on the Strait of Hormuz, 20% of global hydrocarbons go through there, it's a major shipping lane, suddenly you're in a situation where even if companies have the money to buy the inputs and the energy, it's just not available. We just don't have the supply, akin to the 2022 supply shock with the Russian invasion of Ukraine, or even the disruptions to chips that we had in 2020.
Yeah, I think if something like that were to happen, it would be all bets off the table and everyone would have to recalibrate. But given the other scenario that you mentioned, so not anything, extraordinarily out there, but stuff that's already happening already, stuff that we can foresee, if you like. Does that mean a race to the bottom for sovereigns, for curves across the world, that we're going to see them steepening and rising? So
my guess is markets will tolerate the high levels of debt so long as inflation remains roughly under control. And this, for me, is the key story at the moment. It's very easy to look at the level of debt and say, this is the thing that's driving interest rates up. I'm really not sure that it is. I think this is the underlying vulnerability, and this is the thing that, in the end, we'll have to deal with. But the immediate problem for markets is how much inflation will economies produce. So to give you two instances, the UK faces the highest borrowing costs in the G7. If I look at the 10 today, we're around 4.3, 4.4. That's the highest in the G7 by some way. We don't have the worst fiscal position. We have the second lowest public debt to GDP. The deficit is actually falling over time. Canada's the only country where that's happening alongside the UK, and yet we face the highest borrowing costs. Why? Because we've had the most inflation over the last 10 years. Take the case of Japan. For 20 years, anemic growth, underperforming stock market, debt to GDP, public debt rising every single year. The last 18 months, the economy's accelerated, markets have performed well. Despite the stimulus, actually the debt level versus GDP is declining, and yet bond markets are pricing in higher interest rates. Why? Because inflation has returned. So if we keep inflation under control, we can wear the risk, markets can go up. If we get the inflation, we have a problem. Yeah, where is the risk most active that bond vigilantes will activate at some point then? For me, the key issue is around this Middle East problem. If we suddenly wake up tomorrow and we have a shock to global oil markets, we can't get the supply that we thought we could, that's an immediate concern for me. The economy, I think, that's most vulnerable from an economic point of view to this story unfolding is actually the US. So at the moment you have this positive reinforcing cycle. The economy is like a three-legged stool. You run a big deficit, you draw in capital from abroad, you pay your construction workers, you pay your public sector workers. That fuels domestic demand, it pushes up the stock market, everyone feels well off, they spend every dollar they earn. This is a self-reinforcing cycle. Suppose the US struggles to finance at these deficit levels, then suddenly the stock market comes off, consumers turn more precautionary, and we have a problem.
We obviously have initial jobless claims a little bit later on.
Yep.
Paul Donovan of UBS was pointing out earlier, look, in a no hire, no fire environment, jobless claims don't tell us that much. We need to be in at least a firing environment for them to tell us something. What's your read on the US labour market and whether it's completely not as fragile as we thought it was a few months ago, and as the Fed thought it was a few months ago?
I don't think the US economy is actually fragile at all. I mean, I'm very constructive in my base case. My sense is a year from now, 2 years from now, markets will be significantly higher as long as we avoid a supply shock. But the nerves are going to be coming out of the end of our fingers. We're just in a world where there's lots of stuff going on. But a lot of it, I think, we can wear. As for the US, I wouldn't be surprised if labour markets sort of stabilise from here. There's a medium-term headwind from immigration. I suspect there are going to be two forces at play. One is it's very hard to imagine US momentum staying at around 3%, which we've had for the last couple of years. So a slight moderation probably keeps a lid on strong jobs growth. We'll probably see a little bit of destruction at the margins because of AI diffusion, which pushes up the unemployment rate. And I think that will just allow the Fed, which is, yes, it's a dual mandate Fed, but it really cares about its full employment mandate. As long as inflation's in the safe zone, I think the Fed will find excuses to just cut this year.
Twice?
Three
times. All right, Kallum, thank you so much. Kallum Pickering of Peel Hunt joining us today. Now to other top stories trending on the terminal this morning. Apollo and BNP are said to be near a deal to partner up in Europe's private credit market. According to sources, the two firms will arrange loans to corporate and private equity clients in Europe. The source didn't specify the size of the deal. Still on private credit, Marathon Asset Chairman Bruce Richards says private credit is too exposed to the software industry. He spoke on Bloomberg about the levels of risk he's seeing.
If you're a private equity manager, if you're a private credit manager, and you have less than 10% exposure, I think you're just a market and you're perfectly fine, and the market's doing quite well, the overall broader market. Okay. But if you have 23% exposure, which is actually the number for private credit exposure to software companies, you're having a lot of pain right now, and you're going to have to deal with a lot of fallout from this.
The U.S. vowed to maintain high tariffs on China hours after Beijing warned any future hikes. U.S. Trade Representative Jamieson Greer says President Trump wants to keep tariffs on the country steady at a range of 35% to 50%. Now, Greer's comments come ahead of President Trump's trip to China at the end of March to meet with President Xi. Coming up, meetings abound in Geneva. The latest on U.S.-Iran and U.S.-Ukraine talks next. This is Bloomberg.
I'm not even going to speculate as to what it could have been. It's a wide range of things. But suffice it to say, it is highly unusual to see shootouts in open sea like that. It's not something that happens every day. It's something, frankly, that hasn't happened with Cuba in a very long time. But we're going to find out. We're not going to base our conclusions on what they've told us.
Secretary of State Marco Rubio insisting on getting to the bottom of Wednesday's Cuba speedboat shooting that killed 4 passengers and injured 6 on a Florida-registered boat, according to a Cuba Interior Ministry statement. The Cuban government says the occupants were intent on entering the country and planning an uprising. Joining us now from Washington is Mika Sollner of Bloomberg Government. How does the U.S. go about an investigation like this? Mika, when could we expect some answers as to what actually happened here from the U.S. side?
Yeah, I think that the administration is going to act very aggressively to find out what exactly happened there overseas there in Cuba. But this definitely doesn't bode well for tensions between U.S. and Cuba, which have already historically been hostile and have increased under Trump's cutting off oil essentially to Cuba. And I know it's raised questions on Capitol Hill, too, with some lawmakers asking Trump. Democratic lawmakers actually sent a letter to him yesterday saying, what exactly is your plan in Cuba as the the squeezing the country against its oil is starting to have impacts trickle down to the public. So there's a lot of questions here, but I know that the administration is going to act very aggressively on this.
Speaking of oil, Mika, the market obviously pretty complacent right now, but the Iran-US third round talks actually start today in Geneva. Are we anticipating we'll see any progress? And if not, could there be an attack on the part of the US?
I think that it's very likely. The president has indicated that that's potentially where this is going, but White House officials have also been very quiet on their plans in terms of where they're going to go with potential strikes in Iran. Vice President Vance was asked about this yesterday, and he said he's going to defer all of that talk to the president, and he's been very quiet on this. The White House has also insisted that the president's first priority is having diplomatic relations with Iran, but at the same time, the U.S. has been shoring up its military presence in the Middle East, including to Israel, which is a first of its kind in sending aircraft to that region.
Yeah, symbolic and also, practically very interesting that the U.S. would do that. Now, when it comes to talks in Geneva, also the U.S. and Ukraine are talking. Zelensky and Trump are supposed to be discussing the next steps for peace. What are those next steps, given that we're really at a standstill on territory?
Yeah, absolutely. President Trump actually held a call with President Zelensky yesterday for about half an hour over the phone just to discuss what the strategy is going to look like here. But I know that both sides, Ukraine and the U.S., are getting very impatient in terms of, there being no end to this war in Russia and Ukraine that's lasted years now. I know that the White House had a very ambitious timeline at the beginning. They wanted to end this war by Christmas time, but those peace negotiations are still in talks, with Ukraine really not wanting to let up a lot of the influence to Russia. So they're still hammering those out, but I know that this is a huge priority for the White House as well.
All right, we should have updates tomorrow. Mika, thank you so much. That is Mika Solner of Bloomberg Government in Washington. Turning to tech, Nvidia gaining in the pre-market now after some post-earnings swings as results showed strong demand trends. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, is it fair to say we heard everything we wanted to hear? We just didn't hear anything new, as Frank Lee of HSBC said earlier.
Yeah, I think that the missing piece of the jigsaw that people want to hear, but it's too early to hear, is about the kind of scaling of enterprise demand for AI. And obviously, right now, the vast bulk of Nvidia's revenue is coming from the big hyperscaler clients who are, to a degree, investing speculatively in capacity to support what they hope is going to be a big ramp in enterprise and consumer demand. And that kind of ramp is needed to turn the Nvidia strong growth story, 70-80% year-on-year revenue growth, into a sustained strong revenue growth story. And I think that's what people are looking for. Haven't quite got that yet. And so that if you were wanting to see Nvidia become a $5 trillion, $6 trillion company, that's the kind of next catalyst we're looking for.
Where will those answers come from? So is it from consumers? Is it from other companies that are using Nvidia products? Is it from Jensen Huang? Because the market seems to want it from Jensen Huang.
Yeah, I think it needs to come from the kind of really big enterprise customers. Somebody out there needs to suddenly say we're completely transforming our business model to be powered by AI, and that's going to be the catalyst. We heard from WPP today about a big kind of reorganizational strategy. Advertising agencies are really kind of exposed to the AI threat. We haven't quite seen yet, I don't think, the kind of big transition from the agencies, but I think that's a good spot to look at in terms of a real fundamental overhaul of a business model to leverage AI. So when you start to see companies like that take a big move, that's the signal that the next big wave of demand is coming.
Fascinating. We get GTC next month. What will Jensen tell us there? Because the market is going to be just looking for crumbs from that too.
Yeah, good question. I mean, obviously, I think people are going to be looking at what the innovation cycle is on the AI accelerators. Also, we're kind of in Blackwell and we've got the rebound. Where are they in terms of the pipeline? What comes next beyond those? And I think it starts to become not just about the technical capability of these things, but particularly the energy efficiency because we're starting to get to the point where the competition for scarce power generation is ramping up, and so if we do see these projections come true about the scale of increased use of AI, then that power crunch is going to get bigger. So it becomes a kind of onus on the likes of Nvidia to improve power efficiency, and that could be a kind of a competitive axis with some of the upstarts like AMD and even like Google with its TPUs.
Yeah. I want to ask you about the software companies too, because we were excited for Nvidia, but we were also excited for Salesforce and what it might say. What were the takeaways? Salesforce, Snowflake, Intuit, I believe, also? Yeah, so Salesforce, Snowflake, inline numbers, and inline isn't really enough to get people excited. You're looking for that kind of beat and raise. I mean, I think if you look at someone like Salesforce, this is an incredibly well-established company. It's the market leader in CRM systems, and they are potentially at risk of being disintermediated by AI tools. And so really there's a lot of focus and pressure on them. How is their own agentic AI offering keeping them as the kind of leading player? Obviously, a lot of these companies have been under a lot of pressure because people think they're suddenly going to disappear overnight. I think that's like massively overstating the risk. They clearly need to do some things. But think about it. If a company has invested years and years of time and huge amounts of investment in a CRM platform from something like Salesforce, they're not just going to transition overnight to a completely different place. They can't. It's impossible. So even if they have a midterm strategy to get there, it's going to take a while. And that time is the opportunity for the likes of Salesforce to kind of reinvest in AI, improve their product, and keep the stickiness. And it certainly doesn't seem like anyone came out with a brand new shiny narrative for the market to latch onto. Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day with a slew of earnings and another Treasury auction. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Now a look at what's ahead today. Earnings continue with Warner Brothers Discovery before the bell. We also get Dell and NeoCloud CoreWeave after the close, so AI adjacent, you could say. Plus, initial jobless claims coming at 8:30 a.m. Eastern. And the Treasury will auction $44 billion of 7-year notes this afternoon. Let's see if that'll get this market moving. Okay, some micro movers before the open. Nvidia higher now, but more red than green for other tech firms that reported. Salesforce, for example. Well, the forecast was in line with analyst estimates, but it failed to impress investors, and it's down about 3.25%. Synopsys, too. The design IP revenue missed expectations, although overall results were very, very solid at Synopsys, but again, down about 3.5%. It's Trade Desk that's really taking it on the chin today, down about 17%. That forecast completely disappointed investors there. Let's take a look at the macro environment as we head into the Thursday session. After 2 days of gains, S&P futures pointed very slightly lower, but I think it's fair to say that we're a little bit mixed and unsure of direction. Russell 2000 futures, for example, are higher. The Bloomberg Dollar Index has been moving around. It is now unchanged. Asian currencies, though, are stronger typically today. And that 10-year yield is at 4.04. We have to watch where Bitcoin goes today, too, after that lovely rally for Bitcoin holders yesterday. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.